So in this video, we will talk about Fibonacci, and it's still my #1 trading tool within all these years of trading. And why is that so? It's because Fibonacci is, as you know it maybe, is what we call the perfect number, the golden ratio, the golden number. And it applies to everything in life. It applies in nature. You can see it on flowers, for example, on leaves, on so many things. Obviously, it has been used within the art, and that's why you have artists who made pieces that are so incredibly famous, is because the eye is drawn to the golden ratio. Is just how life is, and trading is not an exception. Trading is actually very influenced by the perfect number, the golden ratio, and it's used, if correctly, perfectly for trend definitions, bias, and also obviously taking trades. So I want you to share my vision around it and how I think it should be used. At least it's my opinion. Obviously, this can be discussed. You can. It's after years of studying and observing, and I think it deserves this little video because I don't see a lot of content talking about it this way, and I hope it can help you within your trading career, I would say. So we will look at SPX in a different time frame, as you can see, and I will go through all the screenshots, and maybe after that we will go directly on TradingView to make an example that we could see together to analyze. So SPX monthly. First, we need to define how and what is a low and a high, and how to know and find that, and potentially know where we could have a next high and a next low. So that's quite some things to go through. The first thing first, when I'm going through a chart, is to see, first of all, are we going up or are we going down? And I will go to the highest time frame that I want to look at, which is usually the monthly. Monthly is the highest. I don't need to go for more. I could go to the 1 year to see there is some levels created, but really, like, for a trend perspective, 1 month is really enough for me. I want to see what is the latest low or the latest high that got broken and got untouched after. So in this example, we see that we're clearly going up. So I will look for a low that broke another low and then got untouched. Here we can see that price went and we did, okay, a low, a high, a low that we broke, okay? So this became a new low on the monthly. And then we made a small high, but it was a new high, that got broken, made a new high, and then this low, we made a low that broke this low. So this new low that we had before became not the new low, this became the new low, okay? And we need to see also, I'm trying to speak slowly to make it as clear as possible, because as you know, I'm not English speaking from native, so I just want to make this as clear as possible. Once we broke this new low, we want also to see a continuation towards up and breaking a high. And that's what we are doing here. So we have our new low. But how to know when to trace the Fibonacci to make it useful? Because we can see many times that you will see a new low and you will trace it to this small high. It doesn't retrace and you will be like, okay, what's going on? It's because you need to wait for a market reaction that is quite precise. So when you blink your eyes a little, when I mean blink your eyes, is closing slightly your eyes and you see things a bit blurry, you want to see that the swing that is created, okay, makes maybe some new small lows and stuff. You want to see price retracing by breaking a small, I will say a small low, because it will not be a new low, as the new low is here. I hope you follow me on this, because this is very important. So here we see that we create some new lows here, okay? And at some point we break this low, okay, that is here. And that's where it's a sign for us that we are retracing to potentially create a new retracement low, okay? This is the golden ratio, or the 0.5 or the 0.618, and at deepest the 0.382. So here we have a new low and we have a potentially new high. So we will trace from left to right this Fibonacci. If you want to have a normal Fibonacci, you have 0, 1, 618, 0.5, 382, 1.618, then number 2, and then 2.618. That's the most common thing, you know. And then we will expect a potential retracement to this golden zone ratio, okay? We see that we have some 0.618 retracement, and then it reacted until we went to 0.5. The most common point is 0.5 because it's just the middle, and that's where price will retrace most of the time, okay? The deepest is 0.382. And if it goes below, then we are looking for a potential break of structure that you can see in some instance. But once we have this retracement, we see that we reject and we break a small high. So here we have our new low that is made due to a retracement and not a break, okay? So we have 1, 2, so 1 is the new low, the low that we had. The new low of the beginning of a trend, 2 is the higher high, 3 is the higher low from this new trend, and now we want to see for the new high. And the new high comes in different ways. We want to see within the golden ratio, if we stay within the Fibonacci area, a price retracing at the perfect number, which will be the 1.618, or it could be the 2 because it makes a measured movement, so it means double, okay? Or the 2.618. But in order for you to estimate if it's a new high, it needs to break a new small low, okay? So in this condition here, we shouldn't touch this Fibonacci and keep it as our measurement, as our analysis for the trend. And we see that price is going up. It went above the high without really doing anything of rejection, so that's pretty good. And we went up, and you see that here we made a wick that is supporting 1, but then close above. And what we see is that technically we didn't break any low. So here we're still in an uptrend. Okay, so knowing this is that you're still in an uptrend and it's very healthy, and we have a potential target that could be 1.618. So then, once you have this, you already have a great information of monthly bias that could be really informative for you to know how to navigate through that within, you know, your trading. You could then lower your time frame to go into the daily and understand what's happening. So here, if we are looking at the daily, we can understand that we are at this zone here, and we can see all of this, okay? So here we want to do the same work, which is the extreme low that never got broken visually. And we see that it's here, okay? We see a low here, so I think if we translate it to here, you see there is no low here on the 1 hour that could, on the daily, sorry, that could be visible. But here is the new low that has been unbroken. And now we want to see that the swing created with this new low, okay, will break a high, which it does here. And that's where you need to get concentrated here, because this is a bit more tricky, and I'm not sure I will explain this to the best way. I want to be humble, because I'm not the best explainer sometimes on complex stuff, okay? When we have this new low, so this number 1, okay, and the trend break the highs, we see that we have the highs here broken, we get our new tracement of Fibonacci. And you see I traced it like this. But does this make the new high? No, it doesn't make the new high. Why? It's because we didn't break any low here. But I will still trace this swing as the Fibonacci, because it has been breaking the low, previous low, and the previous high on the daily trend. Okay? I hope you make it, I hope it's understandable. If you don't understand it right away, it's completely normal. It took me several trials, several times of consuming content about it and understanding over and over again on the chart. So if you are lost here, don't worry, you just have to rewatch, okay? And here we can see we had a retracement, but if you zoom in, which I didn't here for the screenshot, we didn't touch the 0.618 at all. Okay, so then we want to wait for the new low without doing anything, because here we still need the healthy retracement to the golden ratio. And we do so here by going to the 1.618, which is still a value for us to get despite not being retraced on the golden ratio, is still something that we want to take in consideration. And as we see, if you blink the eyes, for me the latest low is here, literally, and you have here also, but mostly here. You don't need to be too precise, and we break it. As soon as we break it on the daily perspective, we see that we have a small, on the lower time frame, new high, and you could literally retrace it from here to here, and it goes to the golden ratio. It's pretty sure about it. And then where do we go? We go exactly to the golden ratio to finally take this healthy low, that is the low of starting of a trend, the new high, and the new higher low. And then we continue, and we see that it breaks the high, so totally healthy, but doesn't break any low until up there. Up there, we are breaking the low. So that's where things becomes interesting, is because, as I told you, we expect new highs at certain point. And here I told you 3 points where you can look at new highs. It's either 618, 1.618, 2, or 2.618. Of course, it might happen above. If it happens, great, but it's quite rare. I think you can focus to the simple way. So here, why we can consider this the new high on the 618? Well, first, we didn't break this high, and also we didn't break a low here, okay? On the 2, we did break a high, but we didn't break a low, so it doesn't work. Here, still not. Okay, that's only not here, but that's only when we actually touch the 2.618 that we break a low, that we are at 0.4. Okay, so then that's where you can consider at this moment, okay, now this Fibonacci that I've traced is fulfilled, and I can think of tracing a new one. Okay. But when tracing a new one, you need to think, okay, where is my 0.5? Okay, my 0.5, your 0.5 should be a new low that breaks a low. And here we have this new low, and should it be 0.5? Well, you need to see if it breaks the high. Does it break the high? It doesn't break the high. And then it makes a new low here, but it's still not relevant because it didn't break any high too, okay? And here we break this low again, so this is the potential new low, 5, okay, which we do, and we have to break a high, which we do here. Until, okay, we break the high, we need a retracement, and that's what happens here. Here we retrace, and we see that the golden ratio is made. So we have 0.5, 0.6 because we're above 4, and then we go up and wait for retracement. But what happens here? So it's not 6, it should be 7. What happened here is that, unfortunately, at some point, trends exhaust, and we see that we are failing, actually, to make a new high for this trend. And on the daily perspective, we actually break this new low that we have here to make a potential new trend, okay? And that's where we will then look for something else. So here we fulfilled everything. The golden ratio, the Fibonacci that you traced has been made completely. And now we can go towards a new trend on the daily, knowing that you kept your Fibonacci for the monthly as nothing has been fulfilled yet, okay? So we are daily free. And then we have our potential new high because we broke now the low, okay? And now you will trace, so from left to right, your new trend and look for retracement, which you add on the 0.618. So you have your 0.3, new high, the lower low, and the new retracement, lower high, which goes perfectly, retrace, and goes continuation towards 0.1, doesn't break it yet, so it makes a pullback. But as there is no high broken, as it didn't break here, it's still value going towards down. And we are going down until 618, 1.618, and doesn't retrace, but instead goes toward 2 that coordinate with the 0.1 of your monthly, okay, that is here. That's why everything in every way goes within the golden ratio and the numbers. It is all about numbers. And we can see here that we have a huge retracement, but still that doesn't break the highs. So technically here in your analysis, you will be like, I'm potentially going still down, even though you have the monthly support that you know that can be a very big support. So you could, if you had a brain, you would literally think, okay, maybe I shouldn't short more. But so far on the daily perspective, I'm still going down until I break this obvious high, sorry. So I'm blinking the eyes here and it's obvious high. So then here I'm thinking, okay, now we fulfilled this trend with a golden ratio. So now I need to think of a new trend. And that's where we are at right now. So 1 is the potential new low. We broke a high here. And now what I'm waiting, so we create new highs, new highs, new highs, but they are temporary highs. They are not like highs that where we can trace the Fibonacci because we didn't break any low. But the nice thing is that on the monthly, you know that there is a huge strong support here happening. And above, you have what? You have a nice target. Okay? So you can after go literally on every time frames and navigate between those analyses that you just did, and you will be a much better trader knowing all this, because now you will be much more confident understanding what's happening with the numbers, with the golden ratio and the trends, because you understand how trends work now, how I tell you, with like it needs to break highs and lows to make sure that you trace it correctly, and also wait for the ratio to be fulfilled. Then you can go on different time frames. So here, if we will go on SPX, so what we see is this area, okay? We want to see the latest low that broke a low, but that didn't get broken. So here we see very quickly, we have a low. This was the low that got broken and we got untested, okay? We created overlows, which this overlow got broken. So this is the new low. Understood? Because we had a low and the new low. So then we have to wait for a new low to be broken. So here it doesn't break it. Here for me, when I blink my eyes, it's still a swing. So for me, it doesn't count here. Okay. And then I'll wait. Here we don't break anything. Okay. We don't break until here. And now we are going up. So what I will wait for? Well, I will wait for this Fibonacci to see if it gives me the right perspective. Sometimes you will trace your Fibonacci not the right way. It's really all right. I do mistakes sometimes, but for me it needs to be obvious within the eyes instead of like, oh, I've been so precise, right? So here I will potentially wait for a retracement to 618 or see if price actually goes up 1, take a support, maybe we'll retrace at 1.618 already without going there, but still keeping this tracement of Fibonacci to make sure that I remember that this zone is an important zone. And then again, like you could go on the 5 minutes, for example, keep your Fibonacci from higher time frame, knowing that it will make you very strong supports and resistance level, and understanding the trend. And you will know also what you need to put in favor, like in priority. Should you put shorts or long in priority, knowing that potentially the monthly is bullish, that the daily is in a bullish trend, and the 4-hour too, then you know that the 5 minutes should be, for example, a priority of bullish sell-ups. So here, for example, we look at the latest low that was not broken, which is here. Okay, we have a low and we created a high. Okay, and that's where many people will trace already because you will have the support here. Will trace already their Fibonacci, and it will be a not good retracement of Fibonacci because it will go below the deepest pullback. and it's also very risky setup, but instead you wait for it to break a high. So we have a new low, we have this high, and we break the high. So the real swing to trace is actually here, okay? And what happened is that price, once you will see it here, because you want to wait for the first bearish candle, once it's broken, the high, you see that we retrace to 0.618. So of course, sometimes it can deeper or not, but you still within the golden ratio here. And then price, okay, goes and do its thing. Okay, we make a new high, the low is here, it's broken, but we are still waiting for it to happen at target 1, which is 1.618. So trend continues, and at 1.618, what do? We break obvious low, to then continue, and we could see for a potential retracement, but at least we have our new point. So I hope this was helpful for you.